Financial freedom means different things to different people. Many people view financial freedom as being able to spend their money when and how they wish. It could mean not worrying about how they will pay their bills or sudden expenses for many. Some people might define it as simply being debt-free, while others may define it as being wealthy enough to retire. Despite all these varying interpretations being somewhat correct, all of them are half-baked. Hello and welcome back to our channel. While it may seem ironic, financial freedom is all about control. A better way of defining financial freedom is to have enough residual income to live the life you want, without having to worry about paying your bills or managing unexpected expenses. Achieving financial freedom isn't necessarily about being wealthy and having lots of money. Rather, it is more about having control over your financial present and future. So in this video, we'll share with you 7 things that you need to learn to achieve financial freedom. Number 1. Locate yourself. Understanding where you are financially is the first step to becoming financially free. Knowing how much debt you have, your accumulated savings, your monthly expenses, and your income are all important considerations. It is imperative that you understand your personal financial picture with accurate income, expenses, assets, and liabilities. Number 2. Develop a money management skill. Money management is essential if you want to be successful. Without it, your monthly cash flow will leave you wondering where it all ended up. I would call that a recipe for financial disaster, not financial freedom. Discuss your budget with your spouse if you're married. You may also want to find an accountability partner if you're single. It's impossible to accumulate wealth if you're living paycheck to paycheck. So before the month begins, name every bill and track your spending. It's always a smart idea to adjust the amount in each category if you consistently overspend or underspend. Creating a budget is crucial to get your finances in order, but it does not end there. No matter how much money you earn, you'll always have to create a unique budget every month. A budget is essential, regardless of your financial situation. Financial freedom doesn't happen by accident. Building wealth on purpose is aided through budgeting. Number 3. Find out what investment options you have. Your money has more time to grow if you start investing early, and the compound interest does the trick here. So here are some investment options for you and how to get started. Savings for retirement. Consider taking advantage of the tax-favored retirement accounts that you have at work, such as your 401k or your 403b. What is the ideal amount to invest toward retirement? I suggest investing 15% of your income. Take advantage of your employer's match on your 401k contributions. Don't turn down free money. It's great if your company offers a Roth 401k with good mutual fund options. It's a great place to invest your entire 15%. For traditional 401ks, invest up to the match, then invest the remainder of the 15% in a Roth IRA. If you have any remaining 15% after maxing out your Roth IRA, go back to your 401k. What are the advantages of a Roth account? Investing in a Roth 401k or Roth IRA allows the money you put into it to grow tax-free. If you withdraw money in retirement, you won't have to pay taxes on it. That is a valuable benefit that you shouldn't overlook. Savings for college. Investing in an education savings account, ESA, is a great way to start saving for your kids' college fund if you already contribute 15% of your income to retirement. ESAs work similarly to Roth IRAs, so the money that you contribute grows tax-free. So when you use it to cover college expenses, you won't be taxed. As of right now, you can contribute up to $2,000 per year for each child in an ESA. Investing professionals can help you determine if there are any income restrictions applicable to you. Speak to your financial advisor about a 529 plan if you wish to save beyond an ESA. They're also tax-free. Keep in mind that there are some 529 plans that are not worth investing in. Stay away from prepaid tuition plans and fixed investment options. So, by saving for your kids' college, you're setting them up for future financial freedom by helping them avoid student debt. Investments in real estate. In order to achieve financial freedom, your home should be part of that plan, not a hindrance. Because of this, it's crucial that you make smart decisions about what kind of home you purchase and how you finance it. As time passes, you'll see your home's value increase if it's a sound investment. The extra money you receive from investing 15% of your income in retirement accounts should be used to pay off your house. It is a major step on the road to financial independence to pay off your mortgage. You should not consider owning rental properties until your house has been paid for. If you're investing in rental properties, only do so if you can afford to pay cash and if you're willing to deal with the hassles of the rental process. Taxable investments. As soon as you have paid for your house, you can invest more than 15% of your income. However, before you dive into taxable investing, make sure you're taking advantage of as many tax-favored accounts as possible, such as your 401k and IRA at work. When it's time to move into taxable accounts, keep it simple and work with your financial advisor to choose high-quality growth stock mutual funds with a long history of above-average performance. Investing outside of a tax-favored retirement account means paying taxes. In addition, you may have to pay taxes on capital gains and qualified dividends. You can reduce your tax liability by selecting mutual funds with low turnover rates. Number 4. Avoid getting into more debt to reduce your debt. Maintain your debt-free status if you don't have any. But if you absolutely must take out a loan to purchase a house or a car to support your family, this can be quite understandable and is actually a necessary step in many people's lives. The best thing you can do is pay off all of your debts as soon as possible and avoid getting into more unnecessary debt. Here are a few suggestions. First on our list is making a full payment on your credit card balance. Do not buy something you cannot afford without a credit card and if it is not an emergency. Avoid applying for any credit card at all if you want to avoid temptation. Our second recommendation is to live within your means. Consider prioritizing what you need rather than what you want. Make sure you don't use a pay raise as an excuse to increase your discretionary spending. Finally, make sure you stick to your budget. If you limit the amount you spend on non-essentials, you can set aside more money for emergencies. Unexpected events in life frequently occur, which is why you need to be financially prepared and stay out of debt when they happen. Banks and loan companies charge interest on debts, so it's best to pay them as soon as possible. Number 5. Spend less than you earn. Developing a frugal lifestyle is not so challenging when you have the mindset of living life to the fullest with less. It is often the case that wealthy individuals develop the habit of living below their means before becoming wealthy. Now, there's no need to go to the dumpster with things you've hoarded over the years or adopt a minimalist lifestyle. A money-saving habit to put into practice involves making small adjustments based on what you truly need and what you want. Number 6. Keep an eye on your credit. Credit scores have a significant impact on whether someone can get loans and what their interest rate is. Several states allow employers to review a job applicant's credit history when making hiring decisions, and certain insurance companies may base policy premiums on credit. You can improve your credit score by decreasing debt and paying your bills on time. The reasoning behind this is that someone with reckless financial habits is also likely to engage in reckless behaviors in other areas of their life, such as driving and drinking. Because of this, it's important to check your credit report at regular intervals to ensure no erroneous black marks are ruining your reputation. Taking advantage of one of the best credit monitoring services can also further protect your personal information. Number 7. Take good care of yourself. Invest in your health by visiting the dentist and doctor regularly and follow their advice if you experience any health issues. By changing your lifestyle and eating healthier, you can control many health problems and even prevent them. There are companies that have limited sick days, which make it difficult for employees to earn income once those days have been used. Illnesses and obesity can cause insurance premiums to skyrocket, and poor health may lead to early retirement and a lower monthly income. So that is all the time we have today, folks. I hope you enjoyed this video. If you have any questions, please do feel free to ask them in the comments below, and don't forget to show your support by liking this video and subscribing to our channel to view more of our amazing videos. Oh, and one more thing, please do hit that bell icon on your way out to remain updated about all of our future videos. We'll see you next time.